Ladies and gentlemen, boys and girls, and children of all ages, you are tuned into the Investor Show. Inflation coming in hot. CPI report came out today. Inflation rose to 9.1%. We're going to take a look at that today. And we're also going to take a look at the unemployment numbers. A lot of us looked at the unemployment numbers, jobs report that came out. And we're going to talk about the jobs report, the unemployment numbers. What does that mean? Is that a leading economic indicator, lagging economic indicator? What does that mean for the economy, recession? Where are we at? Real estate, what's going on in the world of real estate? Is real estate the next class to go? And what are we going to do in this current situation? Ladies and gentlemen, y'all hit that like, subscribe, comment, and share button. Y'all tell all your friends. Y'all know what time it is. If you haven't done so already, please go ahead and make sure.
Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button.
Once again, ladies and gentlemen, this boys and girls and children of ages, you're now tuned into the Investor Show. As always, this is your great host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. Like I already said earlier, and as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. Stocks are down. Dow Jones, NASDAQ, all major indexes take the shock as we go into the CPI report, Consumer Price Index, which we're going to take a look at as well. So let me see what y'all say in that comment box. Pete for Life, what's going on, Pete for Life? Pete for Life is in the building out there in Phoenix, Arizona. Thank you for tuning in. He says, what's up, Prince? Appreciate it. I don't know why my Facebook is not coming up. Facebook, somebody saying that Prince of Investment, appreciate that. So anyway, ladies and gentlemen, the first thing we're going to get into what shocked the market today, we're going to talk about that inflation. You know, I was predicting inflation would be in double digits by, I think it was June or July. It was going to be a hot summer. I told everybody inflation was going to hit the double digits. People said, no, Prince, you're wrong, whatever the case may be. But the path that we was on, adding on like that, we had last month, we kind of cooled off a little bit, but this month we had a big jolt. We're going to talk about what does that mean for the economy, what we got going on. So I'm going to pull up on my screen here, and we're going to take a look at the latest CPI report. So in the comments box, if you're catching this live, where do you get the CPI report? The CPI report is the Consumer Price Index, ladies and gentlemen, and we're going to talk about what does that mean for the economy, investments, stocks. Prince, you said we're already in a recession. How does this make you right, wrong, whatever the case may be? But ladies and gentlemen, if you didn't know, you get the inflationary report from the Bureau of Labor Statistics. The Bureau of Labor Statistics, I'm going to pull up right here. I'm going to share this screen. Where are we at here? So you go to bls.gov and go to the Bureau of Labor Statistics, and we're going to talk about different investments that you're not going to catch anywhere else. So I'm going to read this. If you can't read it along with me, if you can't see it, first, I can't really see it, but I'm going to show it to you anyway. So this is coming in today, 8:30 a.m. Eastern, July 13th, coming from the Bureau of Labor Statistics Consumer Price Index. The price index for all urban consumers, CPIU, increased 1.3% in June on an essential adjusted basis after rising 1% in May. So last month it was 1%. This month it was 1.3. It was a lot in June and May. The U.S. Bureau of Labor Statistics reported today over the last 12 months, the all-item index increased 9.1% before seasonal adjustments. All right, this is across the board, right? So you're going to go down here. You can see where did we have, where did inflation jump up, right? You look at all items. All items went up 1.3%. You look at it in December, it was at 0.6. January, 0.6. February, it tipped up to 0.8. March, we went up 1.2. April, we kind of cooled down. It was like inflation is peaking, it's peaking, it's peaking. In May, it went up 1%. June, we're at 1.3. Huge jump in June. I was even shocked. I thought we was going to get something maybe stabilized and maybe a little smidge it up or nothing or something like that, right? So you can see right here, the most inflation came in was gas. Y'all know those gas prices. Y'all know at the pump, everybody is paying, right? So we look at 11.2% in gasoline, followed by energy. Energy and gas pretty much took up all of the inflation for this month. The energy sector up 7.5% with gasoline leading the way at 11%. That you heard everybody, all the memes, everybody's been joking about gasoline. Everybody's been joking about everything. Now, it's kind of funny that fuel oil itself is down, but gasoline is up. I'm not a fuel technician person, but it's kind of interesting number to see, right? So right there, everybody's up a little bit, but you're seeing these gas prices starting to skyrocket coming in. Gasoline pretty much coming in 11.2%. Now, this is the seasonal adjusted numbers that they're putting out. Now, what does this mean for the economy, Prince? You just went through this inflationary report. Great. Inflation is high. We all know this. That's true. Why is this so important? Because what comes behind the inflation? What becomes behind inflation, ladies and gentlemen? I wish I had my little drum roll drummed up, but here it is. After you have inflation, you know the Fed interest rates are based upon this. If you tune in, you see Jerome Powell. He always talking about we're going to closely monitor inflation. They want inflation at 2%. If they want inflation at 2% a year, we are at last month in June alone, we went up 1.3% inflation. So you know Jerome Powell is going to come out in the Fed chair. They raised it at 0.75% last time. They're probably going to jump it up a whole 100 points. So they did a 75 base points. They probably go up to 100 points. I wouldn't be surprised. But you can guarantee and bet your bottom dollar, interest rates are going up at least 75 base points at their next meeting. Inflation is at 9.1% as we head to those double digits. So like I told everybody on inflation was going to be on a hot summer, but I thought those interest rates were going to do something. But hey, here it is. You monitor inflation because guess what? Inflation hurts real income, right? Whether you know it or not, ladies and gentlemen, we have all taken a pay cut. What do you mean we're taking all a pay cut? I drive a Dodge Ram 1500. Right? I want to say a couple months ago, it would cost me about $80 to fill up my truck. Now it costs me $160 to fill up my truck, right? So that extra $80, where did it come from? Where did it come from? This has come from my income, which has decreased my income. It's a tax. It's almost like an invisible tax, whether you know it or not. Let me see what y'all say in these comments before we get rolled. Oh, that's my guy, Al. What's going on? Al said principal investment with the knowledge. Appreciate it, Al, man. That's my guy, Al. So, ladies and gentlemen, so we monitor inflation. Behind inflation, we know it's going to affect interest rates. You see, inflation goes up to 9.1%. Jay Powell and the Federal Reserve are going to see this. They are going to jolt up interest rates. What does that mean when you jolt up the interest rates? It's good for a savings account. It's good for a CD. It's good for a bank account. But guess what you think it's going to do to stocks? Also, Jay Powell is pulling money out of the stock market too. That's another conversation. But as he jumped up on the interest rates, how does that affect the rest of the economy? One, money becomes harder and more expensive to borrow. Now your savings account is going up. The interest rate on your savings account is going up. But guess what? When you go to borrow money, the price is going up. So when something becomes more expensive, what happens to demand? Companies do less of it. Do you think companies will be expanding in this time period, or do you think they will be becoming more conservative in this time period? Most companies are going to become more conservative. This is why it ties on to my earlier conversation where I highlighted S&P 500 companies doing hiring freezes, and some of them are even doing layoffs. Prince, where are you going with this? Who cares? Companies start to retract. They start to do hiring freezes. They start to do layoffs. What does that do with unemployment, right? So unemployment, what are you talking about, Prince? Where are you going with this? We just went from inflation to interest rates to unemployment. The next step is when you have rising unemployment and rising inflation, now you go into stagflation, right? This is what they faced in the early 80s. This is what caused Paul Volcker to, I don't think we're going to go that far to interest rates, at least I hope not, but this is where it's coming back on repeat. Ernest Steele, what you going on there, Ernest Steele? So Ernest Steele says, what's up, Prince? Don't Bitcoin supposed to be decentralized? Nothing should hold Bitcoin if it should move, right? Let me see. He said, what's up, Prince? He said, doesn't Bitcoin supposed to be decentralized? Yes, nothing should hold Bitcoin. It should move, right? Right now, Bitcoin is in the dumps. You know, Bitcoin is a young asset class. We didn't know what it was going to do. Everybody said it was going to be the great hedge to inflation. People said when the stock market crashed, Bitcoin was going to go up. So Bitcoin is still young. It's a young asset class that we're seeing right now. It is getting slaughtered the same time the stock market is getting slaughtered. As of right now, we're seeing inflation in Bitcoin. The correlation is not going out what people think, but we know this is Bitcoin. By the time I get off the show, it could be went from 20,000 back to 50,000. But that's what we're learning now. It's not decentralized. I mean, it is decentralized, but it's not. People saying, "Oh, it's not controlled. Anybody can't get into it." I hear little things like that because I've seen some people report their Bitcoin got stolen, and they found out who did it and got their Bitcoin back. If it's untraceable, how you know I stole the Bitcoin and got it back? And anybody that know anything about computers, if one man made it, another man can hack it. I might not be able to hack it today. It's unhackable, but it's only a matter of time before I figure it out and come in and hack it. Ladies and gentlemen, when this news came out, you saw stocks jolt down. Stocks went down. S&P 500, NASDAQ, Dow Jones. Why is this? Because inflation means people will spend less money. Corporations will give out weak guidance, right? Companies have to charge more. I put up here on this YouTube channel, my Instagram, Facebook. Make sure you follow me on all the platforms. And I told you what restaurants, local restaurants were saying. The price of the chicken wings have gone up. The price of napkins have gone up. The price of the forks have gone up. So now that chicken sandwich that we sold you for $5 is now $7. And they're telling you why, right? Because the price of everything goes up. So guess what? When the price of things go up, people have a tendency to purchase less. So companies are becoming more conservative during these time periods, which next could hurt unemployment. Now, people will look around and say, Prince, what are you talking about? You sound crazy, because when you look at this, we looked at the latest jobs report, and it said the jobs report was good, right? So the unemployment numbers and jobs report go together. Now, let's take a look at this jobs report here. The latest job report that came out, I want to say last week. I was going to do an episode on it, but I don't know. I forgot. Got busy with something and didn't get a chance to get around to it. But let's take a look at it. The latest jobs report, I'm going to pull it up here. And where do you get the latest jobs report from? Drum roll, please. Boom. You have guessed it, back on the Bureau of Labor Statistics. Now that I have it pulled up, let's take a look at it. Prince, why is the jobs report important but not important? So unemployment is at 3.6% that we reported last month. Why does that matter? Why do we care? Prince, why are you talking about it? Right here, look at the jobs report, right? It says the total non-farm payments of June, it rose up to 372,000 in June, and the unemployment rate remained at 3.6%. The U.S. Bureau of Labor Statistics reported today notable job gains occurred in professions as business services, leisure, and hospitality, and healthcare, right? So now here's the thing. Jobs are a lagging indicator. You have leading economical indicators and you have lagging economical indicators. So right now you have your job, you got all that equity in your house, and you're saying, yeah, gas prices are high, but Prince, you said it was an inflation. It doesn't make sense, right? I mean, you said we was in a recession. It doesn't make sense. Well, I keep getting the word inflation and recession. That don't make sense. But anyway, Prince, you said we was in a recession. Unemployment's at 3.6%. Unemployment is a lagging indicator, right? So when you look at certain things, when you look at where we're at right now, inflation is at 9.1%. Companies are going to expect people are going to start to buy less. When people start to buy less, that's less top line revenue, less money is coming into the company. And when people are making less money, what do? Do they expand or retract? Most of them sit back and they start to retract on their business. Once they start to retract on their business, what does that mean, ladies and gentlemen? That means that they're going to hire less people or do a hiring freeze, if not starting to let people go. Once they start to do this, here we go. Unemployment numbers. Nobody wants to hear this, but it's the sad truth. Unemployment starts to come in as a lagging indicator. Next up, you're talking about real estate. Prince, I got all this equity in my house. My home is doing well. What do you mean? What I mean by this is, guess what? As inflation goes up, it's good for real estate. I've benefited from inflation going up when it comes down to purchasing a home, when it came down to purchasing land, great deal. But here's the flip side. As inflation goes up, interest rates go up. As interest rates start to go up, what do you think that's going to do? You think people are going to buy more houses or less? As things become more expensive, people are going to buy less and less houses over time. Plus, if I just lost my job, got laid off, or I saw that my job just laid off 10% on the force, I may not want to go out there and buy that new home or upgrade that new home. I may stay put. So people are not going to be antsy to go out and spend as much or to go get that second house, get that second mortgage, do second things. People are going to become more conservative. All right. Now, and that's when you'll see real estate start to cool off, right? Oh, that's my guy, Herb. What's going on, Herb? He says, what's up, brother? What's going on, Herb, man? Thank you for checking in. It's my first time seeing Herb in here. But now this is what we're seeing. I drew the line from this inflationary report going up by 9.1%, drew the line to inflation, drew the line to the jobs report and unemployment numbers and to stagflation, what we can see inside of the economy. What am I doing? Prince, you just gave me a bunch of information. Thank you for breaking this down in 10 to 12 minutes. However long I've been on live and going through this. What am I doing? Right now, I'm a long-term person, right? Some people are day trading, but I am more of a long-term swing trader. I'm betting big on oil. I'm still riding BPT, seeing what this oil is going to do. Even though I'm scared, I'm thinking oil may have peaked. I don't know. Does oil really have some more to go? But I'm going to ride that to see what oil is doing. In the meanwhile, I'm going to collect the dividends from making this proposition. And then the tech industry, I'm trying to find that bottom, but I'm not that good. But I would like to find that bottom in technology, looking at companies like Apple that are on sale. And if I get caught holding Apple for a year or two, so be it. Best thing I can do now, I can get Apple for $145 and I can sell calls on it and collect a dividend off of the particular stock. That's my way of thinking right now. Get me 100 shares of Apple, sell calls while I'm waiting for the stock to go up. I sell the dividends. If it does get called away, I make the profit on the upside and I collected the premium. I buy the stock. Every 2-3 months, I collect a dividend. Also, when I sell the call, I'm going to make money right away. If I'm right and the stock continues to go up, I sell the stock for a profit. If the stock doesn't go up and it sits sideways, then, like Paul Wall said, sitting sideways, if it sits sideways on me, I just collect the premium and the dividends, and I'm stuck with $1 trillion company. That's what I'm doing right now. And I'm also keeping an eye on WANT, W-A-N-T. Mark that down for me, guys. It's like $20 right now. It's a leveraged bullish ETF on the real estate sector. This real estate sector is getting beat down, destroyed, demolished, right? As inflation go up, less people going to spend less time on Amazon. People going to spend less time shopping, all of those things. So those industry, that sector is getting torn up, Gap, all those guys. But we all know this is not going to last forever. Give it about a year or so, because President Biden is not doing anything with oil. So I'm riding with oil, but give it a year, maybe a year and a half, you're going to see a turnaround. And that's the sector that's gotten beaten up the most. Retail, Amazon, W-A-N-T, WANT is what I'm keeping an eye on. So that's my synopsis there. I'm about to get out of here. Let me see what y'all saying in this comments before I roll. Herb says he's good, man. That's glad to hear, man. I served with Herb in the U.S. Navy many years ago. Good friend of mine, good guy out there in Pennsylvania and Philadelphia. So we got Philadelphia in the house. Ernest, I don't know where you're from. I know my guy Al is here in Denver, Colorado. I know P for Life is out there in Arizona. Those are the people who commented today. Thank y'all for checking in. If y'all like this, y'all give me a thumbs up. Y'all let me know I'm doing a good job. Y'all give me a thumbs up anyway if I suck at it, because I'm still going to be here. I ain't going nowhere. I'm going to keep going until you get to like me, right? I'm going to keep getting better and better and better. And I want you guys and girls to get better and better and become to the one stop. Let's see. Oh, Florida. Ernest is from Florida. So we got Florida in the house. We got Pennsylvania in the house. And we got Colorado in the house. And we got Arizona. So we're on the East Coast, the West Coast, and the South, all on this short little quick little live. Thank y'all for holding me down, tuning me in, letting a goofy guy like me, country guy like me talk on the over the airways, and I'm glad to see y'all. But y'all, there we go. That's our information for today. CPI report came out, Bureau of Labor Statistics, talked about inflation, talked about these other good things right here. Oh, what's that, Carson, Christopher Carson, New Hampshire? What's going on, Christopher Carson? He said as well, thank you for tuning in. Carson, he's another guy I served with on submarines. Hervé, Abobi, and Carson, I served with those guys. Great guys right there many years ago. Glad to see him. So we got New Hampshire in the house. Florida is in the house. Pennsylvania is in the house. Colorado is in the house. And I think I did say Florida. And Arizona. So we're all over the country. Thank y'all for tuning in. Y'all hit that like button. Y'all hit that subscribe button. And also help out my book campaign in the description box. Go to contribute. You can contribute $2 to get my book series, Wesley Learns, into the hands on my drive of getting these books into the hands of every kid in America. Shout out to contribute. Every dollar that I raise, they are matching it. So if you donate $1, I collect another dollar. We're going to take the funds. I don't profit off of this. This is for my foundation. We're just going to buy a bunch of books about the children's books I wrote about investing, credit, and insurance, and we're going to give them to every kid in America. That's what our goal is. So y'all check out the description box. Hit that contribute app. Donate $1, $2, $3, $4, $5, or whatever you want to do, and I would greatly appreciate you because we're going to get matching from contribute. They liked our book series. They're matching us all the way up to 10 grand. So if I raise 10 grand, I get another 10 grand on top of that, which is 20 grand. And then that 20 grand is going to go buy a bunch of paperback copies of the pioneer best children's book out there, Wesley Learns. And we're going to give it to kids and flood it throughout America, one kid at a time. All right. So ladies and gentlemen, thank y'all for tuning in. Hopefully y'all got something out of it. Y'all beat up that smash button, like button, subscribe button. And to the next video podcast, cartoon, or whatever else crazy you see me doing across this globe. Peace. Be safe. I'm out.